Hello, everyone. This is a slightly different video than you've become accustomed to and different than what I've been making recently. Um, I wanted to talk about how the trading went. So the video went out and that's all well and good, but I didn't really go into as much detail as I probably should have. So I wanted to kind of just talk about my trading journey so far. The actual strategies used and like what I'm actually looking for, the realities of it all. What I'm doing right now, the reason I'm in the car is because the car doesn't start in the morning because it's too cold. The battery apparently is just dead. So I'm on my way to get a new battery so I can have a car that actually starts in the morning. So yeah, the reality of that video that went out was that I did in fact make $8,000. It was actually a little bit more than $8,000 from $1,000 in the trading video. I can't believe it myself. And really, I think people have underestimated, or maybe don't even believe me, that I really, like, the strategies here were just completely, like I said in the video, pulled out my butt. Um, the general idea of what I was trying to do was, make sure that you're being opportunistic, where, you have a flash crash that day. If you look at a big flash crash that happens, and then you also look at the worst performing asset I was using BitGet, of course. You look at the worst performing asset on BitGet in a flash crash, that asset's likely, after this flash crash is over, likely to go down even more. It was already the worst performing asset in a flash crash. The idea was, let's just go long, right? So when you go long on a trade, it means you're basically gambling that the price is going to go up. Like, you've chosen that the price is going to go up and you will get paid for the price going up. If you go short, you basically get paid for the price going down. How that works, I have to figure that out, like, to truly be able to succinctly communicate that. But there's long and short. So there was a big flash crash that happened with XRP and actually the whole crypto space. Massive crash happened. I thought it can't go much lower than that. I'm just going to go long on the worst performing asset, which at that time I think was like ICP, Internet Computer. So I looked at Internet Computer, saw the flash crash, put in a long. The other thing that I will mention here as well is that this is all done on 10x leverage. Now that's not the most leverage you could possibly do, and I've said for quite some time, like, don't do leverage. Unfortunately, in this situation, my experience didn't teach me not to do leverage. It taught me that leverage is good. And that's not necessarily the right lesson, or at least maybe the lesson to share that would be the safest for me to share to an audience. But basically, when you're on leverage, you're essentially using more crypto in your trade than you actually have. So if you have $1,000 and you're on 10x leverage, you're actually trading with $10,000. And so how that works in terms of liquidation, like, if you're so far on the wrong side of a trade, like, let's say you put in a long and you wanted that, obviously a long, you want the price to go up. But if the price goes down at a certain point, your whole balance is liquidated because there's not enough to pay back the leveraged amount. So for example, this is why you would like, if you got $1,000, you wouldn't put all $1,000 in a single trade on 10x leverage, because you've got no leverage. You've assumed all the risk. So on a $1,000 trade, let's say you put $500 in and you went long, but the price came down, it starts to eat up into that $500 that you had in your balance that you didn't use for the trade. So this is how people get liquidated, because they don't set what's called a stop loss. Now, stop loss stops you losing more money. So you can set your stop loss so that in a massive flash crash, let's say you've tried to go long and there's a flash crash, at that point, it would basically liquidate all of your balance because there's no limit on the downside. So all you would do is set a stop loss and make sure that when the price comes down to this specific price, regardless of how much it goes down further, I will only lose a certain amount. And so for the vast majority of my trades here, like I just didn't have a stop loss. Such an idiot. Fortunately, when I lost on trades, I caught them with my in person with my own eyes before they could liquidate any of the rest of the assets. I learned at a certain point that the stop loss was super important because I checked my trade and it was down almost to the point where my whole balance was liquidated. Like that's the situation it was. And at that point, I was like, I don't care what happens now. There's only a couple of $100 left to lose. So like, if it goes down even more, then it goes down. That turned into like the price going back up, and it recovered from that point. And I only lost like $70 before I left that trade. But that taught me the lesson of stop losses without even having to do having to learn the hard way, if you know what I mean. And so, you have to take the opportunities for when you see flash crashes. I was really taking a guess, worst performing asset. I think it makes logical sense. Is the asset's not doing well. It's the worst of all of them. It's probably going up from this point. And that obviously my first trade made me, 1,200 or something. I couldn't believe it. Especially when I think about all the, how can I put it? I think about all the effort I put in to videos and the effort I put into my business. And then it was literally like 30 minutes and I made all that money. I was like, what have I been doing? Surely this should be the skill I'm learning. And then like I said in the videos, I think this is something everyone can resonate with. I'll turn that down. Sorry. It's very loud in here. I've got the heating on. It's freezing out here. I don't know if most of you will know what the cold feels like. If there's anyone in the Caribbean, you're in the best place. Well, I've even forgotten where I was there. But yeah, it's just trading seemed to be like I know I can lose, and I did lose multiple times, but I only lost there's something else you can do on the chart where you can set your risk reward ratio, and you can set it in such a way where you place this, it's an indicator on the chart. You place the indicator on and it tells you the amount of reward you will get versus your risk based on where you put the lines. So some of the big tips I heard about trading were you need to have a risk reward of 3. I never really had 3. What I ended up doing was like having really extreme upside and very minimal downside. Obviously that meant there was a lot of turnaround in trading. But I really weighted myself on the benefit side rather than the loss. So what I mean by that is, I'm saying this like no one's ever traded ever before, but just from my 8 days of trading, this is just what I'm sharing. So if you want to go long on a trade, well, this guy, I hate Range Rovers. Does anyone else hate Range Rovers? But also, if I had the money to buy a Range Rover, I would just buy a Range Rover. Anyway, you have an upside and a downside to a trade. So the degree to which you're okay with losing and the degree to which you're okay with winning, there's a number that's affiliated with that risk reward. And that's what I'm saying. Like people were saying 3 is a good number, but my number was way higher because I wanted to have very minimal risk and very opposite of minimal, maximal upside. And so how I did that was, I would look at the chart, look at how the price has moved. I'd look at a place that has multiple support levels. I would place my stop loss just below the support level. So if the price came down and it came down past the support, you could quite easily say that the price is going to continue down past support. Now it's breached the support, it's going to continue going down. So I'm not going to hold my trade for much longer. I'm just going to set my stop loss just below the support level. And if the price does breach, then I'm out the trade and I've only lost a little bit of money. But the upside I would target at considerably higher. So my upside would be way higher than the amount I could lose. So that's what, I took a screenshot for the video of the losses, and I had that big win and I thought I could continue winning. And then it was like loss, 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 loss. All those losses, none of those losses were big. And that's purely because of my risk reward ratio. Like I never really could lose that much. Now, what could happen, and I completely understand this, what could happen is that I could continue to lose. Because if I continue to lose, then it's just going to slowly deplete my balance. And you can quite easily lose continually. Thankfully, though, I think I knew enough just about support and resistance. I can't believe how important that is to know as well, by the way. As long as I know support and resistance, and so you combine support and resistance with taking profits quickly and also having a very high risk reward ratio, meaning very little risk, high reward. On the times that you guess right, basically guessing whether the price goes up or down, on the times where you guess right, you just win. And you will have those wins like I did, like $3,200, $3,400 or something on a trade. It's crazy to me to think that was possible. Now, another thing that I haven't really talked about is that I was on the 15-minute time frame when I was looking at these charts. So 10x leverage on the 15-minute chart. I found that when you're on the 1-minute chart, it fluctuates too much and it's very hard to how do you say it? It's very hard to control yourself in that situation. And things change so quickly on the 1-minute time frame that it's kind of difficult. I then heard a tip from a trader on YouTube, and he was saying, I only operate on the 1 hour or the 15-minute. And I was thinking, well, that's pretty reasonable. It depends how much time you're able to spend in front of the camera, I think. Because if you're like always at the computer, sorry, I didn't mean camera. I was on camera because I was making a video, but if you're always at the computer and you're always checking that window, then the 15-minute chart is probably okay. Because you're always checking it. You can check if the price has just shot up, and you can take that opportunity to sell. On the 1 hour, you have to check the chart less. And on the 4 hour, on the 1 day, as you increase that time period, it also increases or decreases your requirement to have to look at the chart. So it really just depends on what you're looking for. But in terms of like which coins I was trading, it really didn't matter. The only criteria was it the worst performing on BitGet, and has the whole market crashed and that's the worst one? If it is, then I'll go long. But then equally, I've tried the other side where you look, which is the asset that's done the best today? Has the whole market gone up, or is it just this token that's gone up and nothing else has gone up? That one for me is a bit more preferable. So if you've got one asset that's just absolutely exploded, it's like got 80% up and everything else is like even to 1% up, 1% down, like it's a very mixed bag but nothing volatile, but one asset has been volatile, like gambling on the price moving the opposite way that it has been, I think is like a reasonable thing. So in that example that I've used, you have an asset that's gone up, no other asset has gone up, and you short it, like that, I don't think that's a terrible idea as long as your risk reward ratio's aligned. And really, that's the extent of what I was doing with the trading. It's been a fascinating journey. I'm definitely continuing it, and I will do a part two. Because the aim here, I've got a trade open right now. It's not in the profit. It's actually $1,500 in the red. So I'm losing big time on that. But I've also gone into that trade with the idea of like, it's okay. You know, I feel like based on like supports and my just general looking at the chart, it doesn't feel like the price is going to go down to where my stop loss gets hit, which is quite far away. So I'm keeping this trade open. I think this is the trade that will take me over that $10,000 mark. And then it's a case of like, okay, well, if I can get 1,000 into 10,000, I can get 1,000 into, no, I can get 10,000 into 100,000. And maybe that journey is part two. Maybe there's multiple parts in there, but it's been exciting. I know I've got lucky. But I'm here at the battery place now. So let's get this battery so the car does start in the morning. And then we'll get to talking about ETFs and XRP ETFs. Hey, look, costume change. It's freezing out, so I need to put something for the cold. So I've been seeing lots of people talk about this XRP ETF. There was a clip of Brad Garlinghouse at, I think it's Davos, the convention thing. And he basically was getting questioned about the Bitcoin ETFs, Ethereum ETF kind of rumor, and then going further into that rumor about an XRP ETF, and he just didn't answer. And it was interesting that he didn't answer, but you know, we've had, what's his name, Larry Fink, the head of BlackRock, also kind of have weird answers about an XRP ETF, almost like they all know it's coming. It's very, very, very strange what's happening. But personally, with ETFs, I mean, I think I understand ETFs. Right, let me explain what I think ETFs are and do, and how it interacts with the price and stuff. It's my understanding of ETFs that in order for an ETF to be established, one that has to be approved by the SEC. So there's the big hurdle for Ripple or for an XRP ETF. But you have to have an entity that wants to create the ETF. In order to create the ETF, they have to buy that company takes the risk in buying the cryptocurrency. So let's just say it's a Bitcoin ETF, and it's the BlackRock Bitcoin ETF. BlackRock have to buy a vast amount of Bitcoin. Correct me if I'm wrong. I'm just like, this is just what makes sense in my mind, and this isn't even on straight, I don't think. And by the way, in like, hopefully soon, this is going to be not this car. When is the price going to go up? Anyway, so you get BlackRock buying vast amounts of Bitcoin. They buy vast amounts so that they can hold vast amounts, so that their clients can then buy portions, not buy Bitcoin, but buy portions or buy a share, or however that looks, in BlackRock's investment in Bitcoin. So when everyone's thinking ETF happened and the price didn't go up, well, I mean, I said this on the lead up all the time before, whenever I was asked. The price is being baked in. So the hype of an ETF gets baked in. That's the sentiment of like the general person. But what also is baked in is the wrong word, but what also is accounting for accounted for in the price of the asset is the large purchase that BlackRock already made. So let's say BlackRock buy 1 million Bitcoin. Let's say they buy 1,000 Bitcoin for their ETF. Once the 1,000 Bitcoin is bought, no one else is buying more Bitcoin, regardless of how many people get involved in the ETF. So the Bitcoin is bought. It's already there. It's already been priced in the circulating supply. So when companies are like diving into an ETF, they're not diving into Bitcoin. They're diving into a Bitcoin ETF, which doesn't fluctuate the price. And so I think I must be missing something. I must be missing something special, because with my reasoning and what I'm talking about here, I can't understand why people think the price would go up after an ETF. Aside from the idea of potentially like market sentiment being increased and everyone's excited, but it would only be FOMO price increase. It wouldn't be like, it just wouldn't be institutional, like getting into Bitcoin price going up, because the Bitcoin they're buying isn't really Bitcoin. It's part of BlackRock's Bitcoin, for example. So I've not understood why people think the price goes up. But I do understand how, FOMO makes up the most of any bull run. So potentially that's what they're saying. Like, this is the start of a bull run. But like I've said before, and Blockchain Backer said this, you've got to go and watch their video. You'll have to search it. But ETFs come at reversal points. So if the price had been going down continually for ages and ages and ages, like in the short term, and then an ETF came around, that actually has the opposite effect on the market. So actually the market, typically when an ETF is discussed or launched, it's a reversal moment in the market. What had happened instead, though, is that Bitcoin had gone up to its retracement levels between that 0. In the Fibonacci scale, it's like 0.618 to 0.7 something. Bitcoin had already come up to those retracement levels. And if you're a proponent for the idea or the idea that the market is actually going to crash in the short term in terms of Bitcoin, and that really it's really peaked out and now it's just kind of alt season time, yay, but the market crashes after that. If you believe that, then actually the ETF probably marked, if not the high, basically the peak of Bitcoin's run. Even though it's not $1 million Bitcoin or $100,000 Bitcoin, maybe its complete run does just get up to where it came up to, and the ETF came and the reversal came. That's possible. That's all very possible. The good thing about that is that when Bitcoin has hit its peak and it's going sideways or it's going down slightly, that's alt season time. And I think the majority of people in here, we're all about alt season time. We're just waiting for that alt season so that our assets, XRP, XLM, XDC, any altcoin essentially, can do its thing and go up to the places that we want it to. So we can change our car from a Nissan that I'm driving to driving a Range Rover, like all the people I hate who drive. Become one of them. Join the dark side. So when we talk about an XRP ETF, it's the same thing. It's like, if an XRP ETF's going to happen, and it does, let's throw this one out. Let's say an XRP ETF does happen, and it does happen this year. I would be very wary and very cognizant of the idea that, you know what? If we're in a speculation environment and utility hasn't taken over yet at this point, and we've just seen the price of XRP go up to $8, and an ETF comes out, it's a pretty good sign that that's it. I don't like saying that, but I also I'm aware of things that typically happen in the market, and ETFs mark reversals. There's no other way to put it. We also understand that reversals come that ETFs come at the peaks, basically, when the price has gone up. But I guess what I would like you to do is just a little exercise, and I'll do this too. I'm not telling you to do anything, but I think it's a useful exercise to look at your portfolio right now, and then look at your portfolio value would be at $8, right? So your portfolio value at $8, sit on that for a bit. Sit on it for like 5 minutes. Actually stay quiet, sit down, don't talk to anyone. Think about that number. And for many of you, so $8 is a 16x. 16x. You're not getting that anywhere else. You're not getting that investment return anywhere else other than crypto. So let's say you've got $10,000 and you get a 16x. And I want you to kind of sit and imagine, I've got 160K at $8. I've got 160K. Have I ever seen that much money? Have I ever owned that much money? And really and this is on the low side. I think lots of people have more. Have I got my maths wrong? 10K, 10 times 10, 100. 16. Yeah, 160K. That's a lot of money. I know it's nicer. It would be nicer to have 100K in your portfolio and then times that by 16, you got 1.6 mil. Sure, that's wonderful. But you do realize there will be another chance. You'll have another chance. Like, the price will come back down and you'll have another chance to enter the market. And you'll have another chance at that 16x. And if you're trading, you'll have chances in between then as well. I think people are very focused on how millionaires will be made, but seriously thinking about crypto and the gains to be made and tying that in realistically to your portfolio value. So I guess what I'm trying to say is there's a lot of people with $5,000 in their portfolio that are dreaming of XRP being making you $1 million. And without adoption, without true utility, and I think that does come later down the line, to be honest. The XRP is not going to be the one to take you there. XRP is not going to take you from $5,000 to a millionaire in this immediate time period. I mean, I would try and do the maths in my head, but so $5,000, I'm going to try and do it on camera without cutting here as well. I shouldn't even be doing this. So, why did I choose $5,000 as well? Let's say $1,000 to make this easier. Got $1,000. That's about 2,000 XRP. And there's 1,000, 1,000s, and 1,000,000. So that means 500 2,000s. I don't know what I'm trying to do here. 500 2,000s to 1,000,000. I have no idea where I'm going with this thought. The point is, people need to be realistic about their own portfolio value and what that means at certain price points. And realistically, if we're looking at $7 to $11 for XRP, and then an ETF comes out, and the XRP market cap has just flipped the Ethereum market cap. These are all signs where you're like, how much do I believe that this is a speculation bull run, alt season, versus a utility alt season? And I think people should be waiting on the side of this is probably speculation, and we need to either, take profits in other assets at this point, because this seems to be the peak of the alt season. And we've had all the things that happen at the peaks, like a reversal moment, like a XRP ETF. And you kind of look at that and think, it's best for me right now, understanding that if I hold on and I hold on to this, I could be here for another 4 years. And I'm not saying you have ramen noodles every night, but it's how it feels because we're investing so much. You're subscribe. If you're holding on all that time, you're subscribing and you're saying, I'm gonna rough it for the next 4 years again. Yeah, I don't know. I'm making these numbers up, but there's a balance here between, setting your expectations in reality, and then also understanding that we're all going to die and we have limited time. There is unlimited money, but there is not unlimited time. So you just have to kind of weigh all of that up together. Those are my thoughts. So with the XRP ETF talk, a company has to buy lots of XRP, but companies investing in the ETF wouldn't change the price of the XRP based on my theory and my understanding of how ETFs go. So that is why I think an XRP ETF would actually mark the end of an alt season, a reversal moment. However, just to throw in a little spanner at the end, if we see the whole market continue to crash, and we're like, where was the bull run? Where was the alt season? Then an XRP ETF comes out, reversal, prices go up. So these are just the things I'm looking for. Wanted to update everyone on here. It's getting a bit dark here. I'm just picking my daughter up from nursery. That's all. I think when there's something else to say, I'll say it. If you enjoyed this, hit like and subscribe and stay emotionless. I'll see you in the next one.